We just got Tesla's Q4 delivery numbers and they didn't look too good. And this could have a pretty significant effect on Tesla's valuation. Hey everyone, it's Jonathan here, and in this video we're going to discuss the Tesla Q4 2022 delivery numbers and some predictions that we can make off of these numbers moving forward. So let's get right into it. So for the Q4 delivery numbers, we were expecting to have about 420,000 deliveries, ironically, and we actually got 405,000 deliveries, which was a miss of about 4%. And for the year, we're at 1.3 million deliveries, which is a 40% increase from 2021. But it was still shy of the 50% that Elon had forecasted at the beginning of the year. Now, granted, he did go back on his word and said that Tesla will most likely not hit those 50% numbers, but it was still pretty close, so not too bad. In terms of production numbers, we were expecting to have about 439,000 cars produced, and we got somewhere close around there. Around 440 cars were actually produced. So it did beat expectations, and it did exceed deliveries by about 35,000 cars. Now, Tesla has been on record to say that they believe that this is because of their lack of vehicle build mix between their different factories. And to put that in perspective, pretty much, let's say we have someone who orders a Tesla Model S Plaid that lives in Buffalo, New York. Instead of delivering the Model S from the closest factory to Buffalo, which would be Austin, that car has to come all the way from Fremont to Buffalo. And that does extend the delivery times, which makes it a little bit more complicated for deliveries to get out to various customers in that kind of situation. So it is something good to consider. Overall, these numbers were still pretty good, even though they weren't up to market expectations. And most likely because of that, we will see some downwards pressure on the stock in the early trading hours on Tuesday. Some takeaways we could get from these numbers is that we are starting to see supply outpace demand, which we haven't really seen from Tesla, like pretty much I think throughout their whole history, if I'm not mistaken. And the market does see this as a bad thing, but I think that this could be both not only a good thing, but also a bad thing for the company. This could be a good thing because this pretty much means that there will probably be little to no wait time for a car. And in my opinion, I think that that leads to more potential customers because think about it. If you were in a situation where you need to buy a car, you can't wait 6 months for that car to be produced and delivered to you before you can take it. You would probably just have to change what car you get so you can get a car much sooner. But this does lead to a bad thing because if Tesla's growth story does go away and they don't grow at the rate that the market's expecting it to, we can see the valuation contract significantly. As we've seen from some of the data that we look at on this channel, we are starting to see a significant slowdown in the car market. Typically, this has mostly been concentrated to the used car market, but from the most recent CPI data that we got, we have started to see the new car market slow down as well. And this is mostly driven by not only higher interest rates because of the Fed's tightening, which has also led to reduced purchasing power from customers that can't afford to pay these high rates, plus the high price of these cars as well. This pretty much puts the company in a place where they either need to A, slow down production, or B, lower prices. And slowing down production does end up leading to lower revenue as there's less cars to be able to deliver, whereas lower prices are believed to hurt margins. Now, I think that Tesla will most likely go the route of lowering prices, just given the fact that their overall guide is to become the next like Toyota, Honda, Ford, where they're producing millions, if not tens of millions of cars a year. So I think it's a lot more likely for the company to go that route. I think something else that the market isn't considering is the fact that we have started to see material prices start to rotate to the downside. And this is a good thing for the company overall because even if they do have to lower their prices in a softer auto market, it may also allow the lower material prices may allow them to retain their margin or have very limited effects on their margin overall, as a percentage of their margin, as I should say. So that's basically all I got for you guys. As always, please like and subscribe. Happy New Year, and I'll see you in the next video. Peace.